Welcome to M&A Access, the official podcast of the Alliance of M&A Advisors. My name is Gina Galusha, and I am the Executive Director of Membership at AMAA. Today, we have a man who may not need any introduction, Graeme Frazier of GF Data and PCR Partners. Graeme, tell us about, well, first of all, thank you for coming and chatting with us today.
It's great to see you, Gina, as always.
Good to see you. And tell us about your journey in this industry. Where did you start, and how did PCR Partners come together?
Well, first of all, thanks for having me on this podcast, and looking forward to our time today. I got into the industry in a non-traditional way. A lot of people, they go to school, they get an investment banking internship, then they do an MBA, then they work for a bigger bank and end up somehow in M&A. My background was totally different, although I did start working at Donaldson, Lufkin and Jenrette back in the 80s after I got out of school. I went through a process of operating businesses and doing turnaround deals in the beginning. I actually ran a hardback bookbinding company. I was in the printing industry for a while, and we did, because of a great mentor that I met, a guy named John Thatch, we ended up buying some companies that were distressed and turning them around. We ended up merging a bunch of these different printing companies together and going public through a shell corporation and traded on the NASDAQ pink sheets. And ultimately, I exited that business and went to work for a family office in Philadelphia called Berwind in their financial group, in their private equity group. And it was while I was the director of research at Berwind Financial Group that I started thinking about what has become PCR Partners. And PCR Partners I started in 2001, 2002. And we have not strayed from our business model one iota since then. And it's a kind of unique business model. It doesn't, I don't know a lot of other firms or really any other firms that do what we do the way we do it. But so we do buy-side M&A. We source and originate deals working with about a dozen clients that are a mix of family offices, private equity sponsors. A couple of our clients are Native American tribal nations, and so we work on the buy side. We do sourcing and origination for them. We help bring them the deals. We work on the buy side, and then we typically co-invest in the deals we do with our clients. Mm-hmm. And we've been doing that this is our 25th year. So it's an interesting model that's kind of unique. There's 4 of us at the firm, and we've had a lot of fun doing it.
So when you say you co-invest, you talked earlier about how you kind of helped build distressed businesses. Is part of that co-investment you getting to speak into the growth of the company?
It depends. There's some companies where we are totally passive and our client is the sponsor and the majority owner and they're going to drive the growth of the business. And our co-investment is simply one where we can just go along for the ride, but it aligns our interests. And it really makes it so that our clients understand we'll, eat our own cooking, so to speak.
Right.
And so in most cases we're passive, but in other cases we have more active roles. There's another business that's an aggregator of security alarm monitoring contracts that I'm a founder of, on the board of, active participant. Although I don't run it, we have a CEO. And then there's other businesses where I've been on the board of directors and been more involved, but most of the time it's pretty passive. Okay. We'll talk about GF Data, but that was another aspect of being involved.
Mm-hmm.
Yeah.
How did that model come about? This kind of hybrid model. What brought it to mind? What gave it life?
Well, I just think there was a need. The lower middle market is really inefficient, and we source our deals. One of the things that really makes PCR unique is the way we source our deals, and that is that we work with a very large number of boutique sell-side advisors and other advisors, wealth managers, lawyers, accountants, and others. But rather than cold call companies directly to see if the owner wants to sell the business, we like to, as we say, hunt where the ducks are. So we go to advisors that business owners trust, and those business owners may be in transition. They may have hired an investment banker to sell their company. And so we have a willing seller in a situation where there's a likelihood that a transaction is going to get done. The reality is that in the lower middle market, there are thousands of potential buyers. And the better the quality of the target company, the fewer people tend to get to see it. So our clients know that they're just not seeing a lot of deals that they could see. And so we're like an outsourced partner for them in helping them get in front of situations that they otherwise wouldn't be aware of.
A little bit of a bridge, if you will.
Yeah.
Focused.
Yeah.
Okay, cool. That's very cool. So GF Data, that stands for Graeme Frazier, is that right?
Actually, the truth is that I'm the F of GF Data. The G is my partner, Andy Greenberg.
Oh!
Yeah. He and I started that back in 2006.
Oh, see, that's what you get for assuming.
Well, his son will say, Dad, you know it's Graeme Frazier Data, just to tick him off. And I'd like to set people straight. No. In fact, Andy was a hugely instrumental part of the business. Mm-hmm. He and I did start it together back in 2006, but without question, he was a huge driver of that business, and I think our complementary skill sets work together well to make the business make it fly.
He was one of our Thought Leader of the Year recipients, right?
He, in fact, did win the Thought Leader of the Year award, yeah.
Yeah, okay. So you and Andy, how'd you get together on this?
We met when I was working for Berwind, and he was running the corporate finance group at Brown Brothers in Philadelphia, and we worked on a deal together, and we became friends. And so we kept in touch, and ultimately he being on the sell side as a sell side advisor, boutique investment banker, and me working on the buy side, found that our businesses were kind of lumpy in terms of income streams. You know, you close a couple of deals a year. You know, it's kind of feast or famine. And we both thought that it would be neat to have a business where the revenue stream was more steady and constant. And so we kind of put our heads together and came up with a way to work with about 20 of our most trusted friends in the private equity world that we had both done business with, and worked with them to come up with a model where they would give the system data without fear of being exposed as to who they were and what they paid for any given deal. And so we created a system where they contributed 25 or 30 points of data on every deal they did, and but the output was aggregated. It was no names, no individual deal metrics were exposed. So they couldn't be, it was anonymized, and they couldn't be, you couldn't tell who paid what for what deal. And it was, that started it, and it started as, it was more of a community service project and kind of a nights and weekends project, because there just wasn't a lot of data available in the $10 to $250 million enterprise value space.
And how did it evolve from there?
Well, we started it in 2006, and so we had a couple of years of just getting it going and collecting data. And by 2007, 2008, we hired Bob Wegbright, who you might also know, who ran the sales for us. And he started selling subscriptions into the teeth of the great financial crisis. And so we did sell subscriptions, but we really focused on gathering data from more and more private equity sponsors. And I think when we got to 60, it was a real milestone. And then when we got to 100, people started to say, wow, if you have 100 private equity groups contributing data, it must be safe to do this kind of thing. And a lot of people were very skeptical because of the confidentiality provisions in these deals. So it took until about 2012 for us to have to stop funding it ourselves, and we got through the great financial crisis, and the subscription business started to move forward. And so it was by then that it became self-funding and more of a viable business. But it took at least 6 years for that to happen.
How did you choose the data points? Because they stayed consistent throughout almost the entire time, right? If I'm remembering that correctly. So how did you choose those data points?
Andy had a lot to do with that, but we definitely collaborated on, you had to be careful about asking too much, because the private equity groups that were contributing data in the beginning were getting access to the data at no charge. So that was sort of give to get. And what would happen was if you asked them for too many data points, they would say, look, we just don't have the time to do this. Mm-hmm. So there's a real balancing act there. But the idea, Andy and I were both deal people, practitioners doing business in the market, and so that informed what we needed to see and wanted to see.
Mm-hmm. Mm-hmm. It makes sense.
Yeah.
Makes sense. For deal people, by deal people.
Exactly.
Yeah. So, over the years, what have you learned about, as you're watching GF data and that data come in and be analyzed, what have you learned about the market? What's some kind of words of wisdom that you would say you wanted to share?
Well, there's a couple things that are enduring. One is that it's inherently inefficient. The information flow in the market is inherently slow because of the confidentiality provisions that are involved with the deals. Every deal has a confidentiality agreement signed, and like I said, the better the quality deal, the more of a lockdown, and the business owner is really the governor on that. So better margins, better growth, nicer companies, maybe it's a niche business. The business owner doesn't really want the whole world to know what they're even doing, but if he wants to do a transaction, he's going to hire an advisor to help him, and that advisor is going to make everybody who's going to get any information sign a confidentiality agreement, right, so that the information doesn't get shared. So there are certain fundamental governors in the business that make it so that the information flow is very, very protected. So that inefficiency drives what I think is the most interesting and important part of the business, which is that it makes it a very high-trust, relationship-oriented business. And that's what makes it fun. That's what makes Joe Morris, who's my partner at PCR Partners, Andy at GF Data, it really drives us. It's coming to an event like an AMAA event, seeing our friends, people that we've known for years and years, that there's a high trust factor. Right. We're willing to talk about information that's confidential and sensitive because we know that it's not going to go any further. You're going to have a conversation and it's going to be kept in confidence. And the idea is that we're trying to find a solution for every situation that we're coming across. And every situation is totally different because people are different.
Mm-hmm. And desires and outcomes, yeah, absolutely, are unique. Which makes it a little bit of a fun puzzle every time, too, right?
Yeah, every time it's different, and it's ultimately driven by the needs of the business owner. Like, what is what are they trying to achieve? And the outcome is for them, and so our job is to help them achieve what their objective is.
Mm-hmm, mm-hmm, totally. So, you have been an AMA member for 15 years. I love that you're wearing your pin.
More than that.
Well, yes. No, more than that. 15 plus, we shall say. 20 plus? I
spent 13 years on the advisory board nationally.
That's right.
Was part of the Legacy Circle prior to Five Star. And stepped off of that board because one of my clients is involved with funding and ended up staying involved on the conference committee and coming to mostly the national events, but some regional stuff too.
Yeah. So what you just did our market update. You are the curator of our market update panel every conference. What did you share yesterday that you can share on the podcast today?
Yesterday, we covered a lot of ground. There's a couple things that are real sort of highlights. One is the amount of portfolio companies that are owned by private equity right now that are more than 7 years old is over $2 trillion. And even though the lion's share of the dollar value of that is tied up in very, very large bulge bracket deals, the vast number of deals that are smaller value are in the lower middle market. So there is a very high likelihood that over the next 2, 3, 4 years, those companies have got to come to market. The limited partners that invest in these funds need liquidity.
Yep.
And one of the dynamics that we discussed yesterday was that if you're a founder, family, private owner, entrepreneur, and you're thinking about bringing your business to market, this is as good a time as it's ever been. And those other companies that are going to come to market that are institutionally owned are going to create more supply of deals in the market. And therefore, if you're a business owner, family entrepreneur, family-owned, founder-owned, which are the kind of companies that we're typically dealing with, this is a perfectly good time to come to market because there may be a situation where there's a larger supply of companies coming to market because of the dynamics in the industry right now. So that was one thing that was apparent. The other is that multiples are as high as they've ever been, particularly for A-grade companies that have very good attributes like growth, customer diversity, high margins. Interest rates are reasonable to flat to trending down. Multiples are high.
Do you think the multiples are high because there's, fewer deals and there's more scarcity and they're going to go down once we see an influx of deals in the market?
I think it's possible. I mean, it's been a seller's market for a long time. It would be a real change to see more of a buyer's market and to see multiples come down, but it could happen. The problem is that a lot of the companies that are pent up in these portfolios of private equity sponsors are maybe not the A-grade assets. These are maybe the B and C targets that have been, maybe the multiples were high in 2021, 2022 when these companies were bought. Leverage was available, interest rates were very low, they got levered up. So there's a question about what the multiples are going to be on those exits. But there's no question that companies with A-grade characteristics are going to get a premium in any market. And right now they're getting as big a premium as they've ever gotten.
Nice. What else did you guys discuss, discover?
There is Andy Tomat was talking about European buyers coming into the U.S. due to tariffs and some of the changes that we've seen. There's a need for European companies to have a foothold in the U.S. Because of that. And so they need to.
Are we saying that if they have, a contingency in the U.S., then they're not subject to those tariffs?
Well, they'd be manufacturing in the U.S., and that's kind of the point of the whole tariff adventure.
Right. Which we knew was going to be a slow shift, right? Because those things don't happen overnight.
Right.
Just because the president said tariffs.
Right, exactly. And I think the objective was to bolster and increase manufacturing in the United States. So Andy advises European companies who are buying companies in the U.S. We have a client in Switzerland that's buying companies in the U.S. right now, PCR, and one of the things is that they are a little bit more slow and methodical in how they approach deals, and they also are a little more conservative when it comes to the multiples paid. And so that's making it difficult for them to actually succeed. There's a lot of talk about this happening, but there's not that much action, and the results are hard to find. You're not seeing as many deals getting done on that basis as I would have expected by now.
Yeah, another podcast guest who's from the European market came over to the U.S. just because they move so much faster. We move so much faster.
Right.
And it's just a higher rate.
Yep. It's hard for them to compete. If you've got a private equity group in the United States that's serially doing deals, and you're a European company that is interested in, the cultural fit and finding some of our U.S. multiples are on the high side right now, particularly for better quality companies. They're not able to succeed in a process.
Okay. All right. So we already talked a little bit about what you're seeing at PCR Partners that lines up with the data. What else are you seeing in this current market with the work that you're doing with PCR Partners?
One thing really is that, we're starting to see the market pick up. It's been a rough past 2-3 years have been slow. After rates went up 500 basis points, and then we've had one thing after another in terms of surprises in the geopolitical world, and even last year, 2025 was set up to be what was going to be a wonderful comeback year for M&A. And the whole first half of the year, once we had Liberation Day and the tariff scare, the market really slowed down again. So there's no reason to believe that these surprises are just going to stop. But I think if we could just leave the market alone for 6 months or more, I think there's a lot of pent-up supply of things that could come to market, and there's a lot of activity that could be done. Now, we've seen a real pickup. We closed a very nice deal just in December. We have another deal that is closing in the process right now, and another one under letter of intent that should close in the first quarter. And those are deals that were kind of moving slow that all of a sudden pace started to pick up. So we're also seeing some good deal flow coming to market, nice quality companies, business owners deciding to transact. And so I think if you talk to the quality of earnings service providers here, the ones that I've talked to have said they're very busy and their pipeline is deep and long, and that's really good because that's a precursor for deals that could come to market if companies are doing sell-side quality of earnings work at this point.
Yeah, for sure. So at PCR Partners, when I've just been kind of pondering your model, I would think that while you keep saying these quality businesses coming to market, right, those kind of A quality, when you're looking for a deal for your client, do they say, I know he's going to get a really good one because he's invested in this one and they're going to be invested in this one, and it changes your kind of outlook in terms of what you're going to bring to your client?
So you're saying, can we be helpful to our client in terms of getting better quality targets? Or
no, I'm saying I think that there's probably a mindset difference for you guys at PCR Partners when you are looking for your client's next acquisition, because it's also yours. It
can be. It depends. I mean, some of our clients are buy and hold forever, buy 100%, and those are ones that we won't co-invest. We're not. There's no path for an exit for us on that. But we're definitely looking for businesses that we like, that our clients like, that fit their criteria, and that can be, winners. And so that's what we're looking for. And I think the fact that we have developed a reputation where we're extremely careful with how we handle confidential information, how we have a high level of respect for the relationships that the advisors have with their clients, that the relationships our clients have with advisors, and not to duplicate that effort, but only enhance it, I think allows us to see better quality opportunities.
Right. Yeah, you're just kind of in a different level of relationship.
Well, we hope. I mean, you never know. I mean, it's very inefficient out there, so you never know. And we missed a lot of stuff. I mean, there's so many deals that get done that very few people ever see.
The what's the secret market?
Well, like I said, I think the better quality deals, fewer people get to see, because the business owner doesn't want the information flow to be too broad.
Right. Yeah. Right. So, last question. Say that you had lunch with younger Graeme. What advice would you give him?
Well, it's a good question. I would say that finding a mentor, if you're starting out in this business, this isn't, I mean, we have a CMAA program, we have ways to learn M&A, but the reality is they don't really teach it in school. So And everybody thinks, what they teach in school is that you start a business, you go public, and that's the way it works. And the reality is there's an entire world in the middle there, in the private company landscape. And the best way to get involved with that and to learn how to do that is to have a mentor and have somebody actually teach you how to do it.
Right.
And have you understand the protocols and the rules, and
the
that's
nuances.
The best advice I would give somebody, is to find a mentor to help guide you through the process, meet some people, and learn how things work. Yeah.
Thank you for joining us.
Okay.
We appreciate you taking the time to
Thanks for
chat
having me.
and
Yeah.
share your insights. And we hope that you found this insightful. GF Data is a really great tool. Like I said, Graeme always does his market update at our conferences, so swing by, come to the conference, watch us, and then come meet Graeme. And we will see you soon.